Check, please.
Hey, welcome back to Everything Money. I know where you're sitting out there. You're wondering, all these stocks are at a high price. Some are falling. Where do we go from here? We're going to show you 3 stocks that we absolutely love: Google, Microsoft, and Apple. And we're going to put them on our watch list. We need to be ready for them to fall in a value investor's wheelhouse. You're going to learn from a guy who has over $100 million in assets, real estate, multiple businesses, and stocks. He will teach you and I the process of investing in companies and maybe patiently wait for some great companies to come into our wheelhouse. Here we go, Paul. Give it to me, babe.
Thank you, Seth. Guys, 2 things I want you to do for me. If you like this video, at any point, like it, subscribe to our channel, and hit the notification button. So I just lied to you and said I wanted 2 things, actually 3 things, but that'll not be the last time I lie to you.
That's true.
Let's go. We always talk about stocks in our sweet spot. And the one thing I love is, and this is our Everything Money software. Let's pull up Microsoft. Everything Money software. We go to the 8 pillars. This is one of my favorite things to look at, even though it has 2 X's, and these X's are important X's. What X's are those?
Valuation metrics.
Valuation metrics.
1 and 8.
So
yeah.
What we have here is we have 2 values: 51 times earnings in the last 5 years and 51 times free cash flow in the last 5 years. Awesome. Okay, what does that mean? Well, it means the stock could very well be overpriced. Go look at our past videos on Microsoft. We've talked about it. It is overpriced, in my opinion. Now, if you remember, I also made a video. Actually, you don't remember this. This was only for our community members who get exclusive video content from us. I made a video about how I was wrong on Microsoft. I was right on Microsoft very early. Everybody's like, tech is dead. You're an idiot. You're buying Microsoft in the high teens. It was 2011, 2012. Tech is dead. Microsoft dead. I sold at 55, 58, high 50s, thinking, okay, well, I don't think their growth potential is as big and the stock's getting up there. Whoops. 295. All right. Now, do I think Microsoft worth 295? Absolutely not. I have run Stock Analyzer tool several times on Microsoft. I'll do it right now very quickly.
Have you now?
What was that?
Oh, no. Keep going.
So just to do Microsoft real quick, 4, 6, 8% revenue growth, margin of 27, 29, 31. I'm going to do the same thing for free cash flow, multiple 13, 15, 17. And guys, there's a big video that Seth will point out that'll teach you more about the Stock Analyzer tool and our 8-pillar analysis. And I look at Microsoft, I don't think it's a 110 stock. I think it's more around 120 to 140. But I'm just doing a quick analysis here and going, okay, so that's how I was wrong on Microsoft. I sold it in the high 50s, and I think it's worth probably almost triple that. But this is what I love. This is what I love about our 8 pillars. This allows me to love a company and add it to my watch list and say, when the stock falls, because it will eventually fall, or what else could happen, Seth? Instead of the stock falling, what could also happen?
Well, it goes way up.
What's way up? No, to make me buy.
Oh.
So 2 things can make me buy.
Doesn't the stock have to fall, right?
Or
falls out of favor?
Fundamentals get a lot better.
Oh.
Now, which is easier to happen?
Well, in a company this magnitude.
Yeah.
I see.
It's stock falling. So it's just like anything. When I sell puts on a company, they're always more expensive than, I get more value than calls. Why? Because it's fast. It's easier for a company to fall fast than it is to go up. So same thing here. Now, a lot of people out there who are in la-la land and delusional, they think that, oh, don't worry, the fundamentals will take care of itself. It's going to take a long time for the fundamentals of Microsoft to justify today's price. It might take years. And based on where we are in the market cycle, I think it's more likely it falls. But guess what? I'm a patient guy. I'll sit here and wait. I have zero FOMO. I did not concern myself at all when Microsoft, I sold at 55, 58 and it went to $1 billion. I did not care. Say, okay. Same thing. Let's pull up another company. The Goog. The Googly Moogly.
Mm-hmm.
You ever see 30 Rock?
Never watched it once.
Great episode. There's an episode where Tracy Morgan says to Liz Lemon, he goes, hey, Liz, LL, can I Google myself in your office? And she goes, sure, Tracy. And Tracy goes, can I use your computer? She's like, I don't know how else you'd do it. He thought Google himself meant something completely different. So it's a funny skit.
I was going to say, I've seen you Googling yourself in your office.
I Google myself all the time. So
this is another great company.
8 pillars. What do we got here? Actually, it's less. I'm selling for a lower multiple.
Look at that.
Than Microsoft. And I would argue that Google probably has more potential than Microsoft in terms of driving revenue, because they make their money off advertising. It's basically the biggest advertising company in the world, right? And the world's getting bigger and bigger. And more people around the world are starting to use Google because the world's becoming more and more economically independent, things like that. People are becoming wealthier, etc. All right. Same with our good friends at Apple. 8 pillars of Apple. Again, add to my watch list. Now, our friend Warren Buffett, he owns Apple and he's owned it for a while now. He owned it at a much lower price, right? So he's the kind of guy who buys a company and says, listen, it's a great company. I'm going to keep buying. I'm going to keep owning it. Look at their shares outstanding. And they have bought back 21.6% of their shares. And this is what I love, guys. When companies have a lot of free cash flow and they're so large, they can only do a few things with their money. There are 5 things you can do with free cash flow. Where are they, Uncle Seth? We haven't done this in a while.
Boy, they can buy back shares. They can buy other companies, make acquisitions. They can pay down debt. They can reinvest in themselves, and they can buy Ethereum.
Or?
Issue a dividend.
They can issue a dividend. So the best tax way to do it, the most tax efficient way is to buy back shares. Because what you're doing here is you're giving your owners of the company a larger piece of the company. If a company has 10 shares outstanding and you own 1, you own 10% of the business. If the company buys back 2 shares, you still own 1 share, but now it's out of 8 shares. You now own 12.5% of the business instead of 10. By doing nothing, the company has rewarded you. And that's what's going on here. That's exactly what's going on here. So when companies are very large and it's hard for them to find growth opportunities, they just buy back shares. They pay down debt. They buy back shares. They make the company better for the investors. They should at least. And that's what we're looking for here. Same with these 3 big companies. At some point, they'll fall out of favor because revenue will stop growing at 80 billion% a year. People will say Google's dead. Don't you know about AskJeeves.com? They're back. They're making it big again. Whatever it is, there'll be some story that everybody attaches themselves to, right?
Yes.
Our goal is to wait for that story to come out and wait for people to look at the company and the stock price as different things. We want them to say, oh my God, the company has growth potential problems and they're going to collapse the stock price. And what will that do? It'll probably make this correlation a lot more interesting to a guy like me. That's what I'm looking for, is a disconnect between people's perception and reality. That is exactly what I'm looking for in all the things I do. And these 3 companies, right now, I think the disconnect between reality and the stock price is skewed to the area I don't want to be in. I think stock value is this, the price is up here. I want it to be like this. The stock value is here, the price is down here. That's what I want to get to.
So, Paul, I'm hearing everything you're saying. 3 great companies. We see this in our community. We see this on Instagram. People say these are buys and holds for a long time. When do I buy these? The 8 pillars sort of lead me down a path, but when do I pull trigger? All of these have to just fall, right?
At some value goes up and down, and the pendulum swings. This pendulum has gone to a level that I did not think was even possible. Mm-hmm. Every value investor I know who's reliable and credible will sit there and say that it's a very, very difficult market right now. Charlie Munger and Warren Buffett are 91 and 97. They said this is the worst market they've seen, the hardest time for deals they've ever seen. They're 97. He's 1 billion years old. Yes. 1 billion.
Yes.
And he says it's the hardest thing he's ever seen, hardest market he's ever seen. Okay, it'll swing the other way. And there'll be a time when you come to your Uncle Paul for fondling and hugging, and I say to you, buy this company, it's going to be great. And 3 years later, you're going to be like, Paul, the stock's the same. Great, buy more shares. Why? Because it's too good of a time to buy. That's just going to happen. The pendulum has to swing. There'll be a time when it's like, oh, great, Paul wants to buy another stock. Paul thinks everything's a buy. Then why isn't it going up? I will always be perceived to be wrong in the public's eye, as that should be, because that's exactly what makes value investing work.
Hey guys, Seth here, jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of thousands of dollars, made the software. You get 30 years of financial data. You get access to Seth, Mo, and I, 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, You felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now.
If this resonates with you, you can follow our 8-pillar approach, the 8 metrics we use to analyze a company. They're up in the right-hand corner here in a card that's going to pop in, and you can go in depth as to what our process is. Until then, join everythingmoney.com, get the software. You will love it, and that community, you can chat. Like, subscribe, tickle that notification bell, and we'll see you next video. Thanks, Paul.